Concerns have arisen about the possibility of 5 countries, namely Brazil, Russia, India, China, and South Africa, creating their own currency as a potential challenge to the US hegemony. Now, we need to understand that a world reserve currency has not lasted for more than 105 years. Given that max lifetime value, that would put the US dollar to be dethroned in the year 2050. Now, will the US dollar last another 27 years? Given how things are going, probably not, but will it not even last another 27 weeks, as a lot of these doomsday folks are claiming? While reports suggest that the BRICS alliance is exploring the idea of a new currency, it's essential to assess the credibility of such claims. It's worth noting that the economies of these countries, except for China, are relatively small in comparison. And although India holds promising potential, the feasibility of this endeavor remains questionable. Considering the current financial stability risks and prevailing tensions, it's unlikely that the creation of a new currency is an immediate priority. It's possible that this idea is a revived notion from previous discussions rather than a recent development. Therefore, the immediate concerns surrounding the impact on the United States may be unwarranted, at least in the short term. Moreover, the introduction of a new currency from a group of nations is not without precedent. For instance, when the euro was established, it didn't fundamentally alter the global economic landscape. In fact, some argue that the euro contributed to the European crisis and hindered growth by eliminating individual central banks' autonomy. Reflecting on Europe's experience, we observed the prominence of the euro in the early 2000s, followed by a severe austerity crisis from 2010 to 2014. The impact was so substantial that basic services like trash collection face financial constraint in countries like Greece. These events underscore the complexities and challenges associated with a shared currency. Therefore, while concerns arise regarding the potential implications of a new currency, it's important to approach the subject with a measured perspective. Historical examples demonstrate that the creation of a collective currency does not automatically result in a dramatic shift. Let's examine the Eurozone experience to understand the complexities associated with a shared currency. Efforts were made to limit the dominance of strong countries like Germany and France, which resulted in austerity measures imposed on other nations. This approach faced criticism because highly indebted countries like Portugal, Italy, Greece, and Spain required economic stimulus rather than austerity. Consequently, widespread protests erupted and concerns arose about the potential collapse of the euro. The shared currency experiment faced challenges as it limited the flexibility of individual countries to print money and engage in liquidity swaps. Attempts to engineer currency often led to less functional outcomes, as witnessed in Europe. You can see where growth declined and negative interest rates emerged. When we consider the countries involved in discussions about creating a joint currency, it becomes evident that their economic sizes are considerably smaller when compared to the United States. Russia, despite its claims, has an economy roughly half the size of Brazil, and its economic strength has even weakened further in the last few years. The United States GDP remains 15 times larger than Russia and 55 times larger than South Africa. Although China's economy holds some resemblance to the United States, it faces its own challenges. Likewise, India's economy, while showing potential for growth, is currently 1/8 the size of the United States economy. Considering the scale of these economies in relation to Europe and the United States, the notion of a new joint currency holds limited significance. Therefore, the prevailing concerns about the potential formation of these currencies appear to be unnecessary. Again, at least in the short term. It's worth noting that discussions around the dollar's reserve currency status and rise of China has been ongoing historically. However, they don't pose an immediate threat or signify a major crisis. Any potential shift in the dollar's status as the petrodollar or the reserve currency is unlikely to occur in the very near future, particularly before oil loses its significance in the global economy. Additionally, the idea of Mexico joining such a currency alliance holds little significance or impact. Ultimately, the formation of such a currency, if it were to happen, could potentially create problems similar to those witnessed in the Eurozone. Hence, the significance of such a development remains questionable. It's important to consider the logical and practical aspects of such a move. China, for instance, wouldn't willingly give up control of its central bank, not to a joint entity involving South Africa, Brazil, Russia, and India, and maybe Mexico. The idea of a joint currency gained traction even in African countries after the introduction of the euro. They contemplated creating the Afro currency, but this initiative ultimately fell apart. One must question the true impact of a shared currency. Would it make a substantial difference? Not really. The strength of the currency would depend on the underlying economies. Even if, hypothetically, the joint currency had a larger combined economy than the United States, it wouldn't garner the same level of trust as the US dollar. The risk of countries like Russia going bankrupt and devaluing their bonds would need to be accounted for. Now, mergers, even between good companies, not countries, often result in a loss of innovation and overall effectiveness. And then the end result is a single mediocre company. The same principle may apply to emerging currencies, dampening their potential benefits. While reports mention Russian officials emphasizing the importance of finding new currencies, it's crucial to differentiate between a new medium of payments and a whole new currency. Competition in the banking and payment system is healthy and can drive innovation. It's worth noting that this source of information is Russia, and this raises questions about its credibility and potential for propaganda. Stable currency would most definitely benefit Russia, considering the current instability of the ruble, which of course has depreciated by more than 20% recently. So for the most part, there doesn't seem to be much to worry about in the short term, but the long term is a different story. So let's say the US dollar is going to last another 20 years as the world reserve currency. If you're 20 years old today and found this video, then you're going to be 40 when it happens. You might have children that could be 5 or 10 years old, depending on when you started to have those children. You're going to want to figure out how to feed them and provide for them. My basic message is that while the US dollar might not collapse in the short term, in the grand scheme of things, even 20 years might be considered the short term when considering the lifespan of our nation and ourselves.